This chart shows the combined market value of Apple, Amazon, and Google. Now compare them to a single enterprise founded 400 years ago. By some widely cited estimates, that company reached a peak valuation of roughly $7.9 trillion, completely dwarfing those modern giants. Operating on paper as a private, profit-seeking business owned by shareholders, it commanded its own army. It fielded a navy larger than most nations. It held the legal authority to coin its own currency, negotiate international treaties, and wage war across the globe. Yet the most powerful corporate entity in human history did not begin with grand imperial ambitions. The Dutch East India Company, known by its Dutch initials as the VOC, was created to solve a remarkably mundane business problem. In the final years of the 16th century, Dutch merchants were sending highly perilous expeditions to Southeast Asia to trade for spices. These expeditions were funded by separate competing trading groups known as the pre-companies. Wealthy private investors would fund a single voyage at a time, dissolving the venture and paying out the profits once the ship safely returned. This diagram illustrates their fatal flaw. Multiple independent Dutch companies bidding against each other for the same spices in Asia actively drove up the prices they paid. Back in Europe, they undercut one another, driving sale prices down and squeezing their own margins to zero. The prize driving this frantic competition was a highly specific, geographically concentrated category of goods. Spices like nutmeg, cloves, and mace grew almost exclusively on a small handful of islands in the Indonesian archipelago. This uncoordinated scramble created a self-destructive economic trap. To prevent the merchants from bankrupting themselves entirely, the Dutch government intervened to force a solution. On March 20, 1602, the government forced these competing pre-companies to merge into a single unified monopoly, the United East India Company. To finance this massive new operation, Article 10 of the VOC's founding charter introduced a radical departure from standard practice. Instead of relying solely on wealthy merchants to fund isolated voyages, any resident of the Dutch provinces could buy ownership stakes in the ongoing enterprise. In August 1602, the company held what modern financial historians consider the world's first initial public offering. A total of 1,143 separate investors subscribed, raising an enormous initial capital pool of roughly 6.4 million guilders. Because these shares were permanent rather than tied to a single voyage, investors needed a reliable way to buy and sell them to one another. To facilitate that trading, the Amsterdam Stock Exchange was established later that same year. By deciding to sell permanent, tradable shares to the general public to fund a merchant fleet, the VOC accidentally created the structural blueprint for how global capital markets operate today. The government granted the VOC far greater authority than a simple trade monopoly. From its very first day of existence, the charter legally authorized the company to build military fortifications, negotiate international treaties, and wage war entirely independent of direct state military involvement. Armed with these powers, the company expanded rapidly. Over the next 2 centuries, VOC ships made nearly 5,000 separate voyages, establishing a vast network of trading posts, administrative centers, and heavily garrisoned territories across the Indonesian archipelago. Because the most valuable spices grew on a small handful of islands, the VOC pursued a severely aggressive economic strategy. If they could militarily seize and control those specific locations, they could control the global supply and dictate prices at will. Maintaining that exclusive control required a staggering human toll. Historical records detail how the company secured its monopoly through documented violence, enforcing the displacement and enslavement of local populations across the territories it managed. The massive profit margins the VOC extracted were not the result of supply chain innovation or free market efficiency. They were achieved by wielding sovereign-level military force to eliminate competition entirely. The VOC maintained this dominance into the mid-17th century, but its decline stretched out over the next 100 years. The enterprise became burdened by extensive internal corruption, the mounting costs of garrisoning a colonial empire, and fierce external competition from the expanding British East India Company. By the time the company was formally dissolved in 1799, the operation was entirely insolvent, surviving its final years only through direct government bailouts. Yet the detail most people associate with the VOC is its peak valuation, frequently cited online as $7.9 trillion in modern dollars. Economic historians fiercely debate the accuracy of this figure. This scale illustrates the discrepancy, converting historical guilders using gold yields that multi-trillion-dollar estimate. But adjusting for inflation relative to the 17th century's tiny global GDP produces a vastly different result, placing the company's value closer to a few billion dollars. Arguing over which modern conversion formula is correct ultimately misses the point. The exact dollar figure distracts from what the VOC actually left behind. The enduring legacy of the Dutch East India Company is the financial architecture embedded in Amsterdam. The company built an entire ecosystem of secondary financial instruments around its shares, issuing formal debt instruments like corporate bonds to raise additional capital between dividend periods. The Amsterdam Stock Exchange quickly developed the hallmarks of modern markets. Financial historians trace some of the earliest documented examples of short selling, speculative bubbles, and market manipulation directly to the trading of VOC stock. The mechanism by which trillions of dollars in corporate ownership change hands today traces its structural origin straight back to 1602. The modern stock market exists simply because a group of competing Dutch merchants needed a way to stop overpaying for nutmeg. Empires rise and fall, but institutions can outlive them all. The Dutch East India Company vanished in 1799, yet the financial system it helped create still powers the global economy today. Thanks for watching, and subscribe to Global Wealth Narratives for more documentary stories from history.